Welcome to the Strong Source Commodity Podcast. We are your hosts, Martijn Bron and Alexander Sterk.
Welcome, our audience, for yet another Strong Source Commodity Podcast. Today, with a special guest, also a friend of mine, Denis Zaica, who is Chief Trading Officer of FincoEnergies, has also a long career in Cargill as a trader. And I really like that Denis is our guest today because I've been writing on LinkedIn quite a lot about commodity careers. And one of those posts was about the fact that I realized that over the years I have hired not standard profiles, people with different backgrounds. And Denis is such an example. And the way we met was quite interesting because I wasn't really satisfied with the recruitment process that we were having in Cargill at the time. So together with a colleague, I organized a recruitment process myself. We spent 2 days in Paris because we wanted some French, or at least candidates who were educated in France, because we were impressed by French students and the French education system. So we spent 2 days in Paris, and every day we interviewed 10 candidates. Yeah, that was so 2 extremely long days. And of the 20 candidates, Denis was the very first that we interviewed. And we were very, very impressed. And we thought, shit, man, if all those candidates are like him, this is going to be insane. But that was not the case. They were good. But Denis was by far the best that we interviewed. And so we decided to hire Denis as a trainee on the cocoa trading desk. Now, and what I find interesting about Denis, because it shows for our audience a very nice view of what a commodity trading career can become. He's originally from Moldova. Then he went to France, I think, with his sister. Is that correct? Yeah. Got educated there and ended up on a trading desk in Amsterdam, trading cocoa. And now is the head of trading in an energy company. So I think that's a great, trajectory, showing for our audience, a lot of youngsters, that there are different ways of being successful in the commodity trading industry. So Denis, very happy. I saw it right in 2011. I saw it absolutely right. And it's the circle is round now that we interview you as a very experienced, successful commodity trader.
Welcome here in this podcast. I'm very much looking forward. I was already talking to the guys here in the podcast before we started even about the world of biofuels, the war that's going on, what the impact will be on the fuels, on the biofuels. So I'm very excited about this podcast. I think the timing talking to you about biofuels is a good one. So welcome.
Yeah, thank you very much, Bos. Thank you for the introduction. And excited to be here.
So maybe it's good before we kick off and go in depth immediately about this world, maybe if you could say a bit to the audience about yourself, what you've done at Cargill and now at Finco, would be great to hear.
Yeah, sure. Yeah, so as I think Martijn introduced, it's been quite a journey. Basically, let's say, how I started in commodities. I think that's also one of the questions typically, is that I've always liked intellectual challenge and always have been a fan of mathematics, financials in my studies, be it the school or university years. So focused on economics and finance and really looking for a way, let's say, to see how can you apply that willingness to understand some complex intellectual puzzles, understand the economy in the world, how the world functions, and always the international environment, so the business and the international aspect of it. So somehow through the course of those activities, let's say I got exposed to commodities market a little bit in the studies. I did some summer schools in Norway about energy and environment. Then I went to UN in Malaysia, looked a little bit the impact of palm oil plantations on the energy, on the climate. And then during my studies in Paris, also started looking more on the commodities sector, which was a specialty, so finance and commodities, where you start to look, well, what actually commodities are, how do they function, how do they make the world move? And in that sense, I think it sort of ticked all the boxes I had in my mind. It had a great exposure to sort of microeconomics, financial world, the mathematical challenge. It had the excitement of being very tangible, something that you can really relate in your daily life. And it was very international by nature. The commodity trade is typically a very international aspect. So I've been looking for basically ways to enter the commodities world, as most looked at the biggest companies out there, the ABCDs and the others. Cargill was definitely at that moment the top of the list. And I think for many good reasons, it's extremely diverse from the product portfolio perspective. I think it's difficult to find a company that has so many products that are being traded on a daily basis. And sometimes you surprise yourself that you discover a new product that the company is active in. You haven't even suspected about it. It is very international. So through the recruitment process, which Martijn briefly mentioned, cocoa came to the table, cocoa in Amsterdam. And I have to say, when you start, you don't really start with an idea, I want to trade this or that commodity. I think you just start with that concept. I want to be in that vibrant environment. I want to be able to apply my mathematical skills, a passion for challenge, ambition, excitement, work with talented people. So you don't really target the commodity. So cocoa was really something that came to the table in a surprising manner. And I've spent quite some time in cocoa after that. So I started in Amsterdam with on the commodities trading desk, let's say, of cocoa, where you had both the physical and the financial aspect of the markets. And I think there basically cocoa is quite an exciting commodity in the sense that it's a niche, but it has a lot of different facets to it. You have the sourcing part of the story, and this is really where I started. I think the interesting aspect is that it's the sourcing and the production is predominantly West Africa, very different to European industrialized production of agricultural sector or US. You're really looking at a smallholder farmer type of economics with a lot of middlemen. In West Africa, a very different way of doing business. So, a little bit, one of the first experience was also, having a trip to Cameroon, go and see the supply chains by yourself, understand how it works, meet your suppliers. And that's where I think the physical, very real aspect of it becomes obvious. You see the farmers, you see the trees, you see the warehouses, you see the whole logistical supply chain. So I think that was really exciting in understanding what you really do once you go back to your office and see it behind those screens in your air-conditioned office somewhere there in Amsterdam, to understand that the reality of the sourcing is really the production part, and obviously the demand part was more in the developed markets. So I was focusing on the physical sourcing, which of course is quite closely related to trading and risk management, because you very quickly you have to understand, well, what exactly am I buying? Okay, I'm buying some particular volume, but what's the quality of that? What quality do I actually need? And what can go wrong? And that's very quickly I realized, well, maybe a counterpart risk exposure is there. Maybe execution risk exposure is there. Maybe mark-to-market that I have on my forward contract commitments is there. And by the way, what's a good price to buy the physical material? And that's where you go to discussion about the basis or differentials, as it's called in cocoa. What is high, what is low? You start to form your own opinion. And that's also quite a process as a development, I think, in the early years in trading, because you don't have any readily available answers. You need to understand, well, how's that basis evolving? Is it related to the market structure? Is it related to the supply and demand dynamics? Is it related to the other alternative origins? What should be the fair value of different bases for different origins? Is it just the quality? Is there something else that could be behind that? Is it maybe security of supply, volume availability, competitiveness on the sourcing angle? So I spent my early years really on that sort of sourcing and risk management related angle, where I've looked at all the West African countries, so Ivory Coast, Cameroon, Nigeria, Ghana, traveling there. At a certain moment, there was actually some sourcing operations in Asia as well. There was a hope that Asia production would increase dramatically, as it did in coffee, for example, in Vietnam. It didn't really materialize. I think up to today, there's been sort of unrealized hope for the region. Latin America was also in scope. I think that was one of the exciting ways is that you also see, and I think there's been Cargill a little bit the approach as well, you're thrown out there, and then if you prove yourself capable to swim, then you get the waves, and then once you can swim over the waves, and they make it large and large, and then they introduce the whirlpools and the hurricanes and the tsunamis. And if you can swim still in that environment, you'll keep getting more responsibilities and tasks. And I think that's what happened. And expanding on the supply part, and really becoming increasingly focusing on how do we manage the whole portfolio of the sourcing we have for the assets we operate. How do I optimize it commercially? What are the risk exposures it brings also on the trading angle? How do I bring the trading insights into my physical positions and vice versa? After that sort of more origin-oriented trading angle, let's say, there was, more a transition towards a product management, so the other side of the business. And there in the cocoa, you have different products. You have liquor butter, powder. Butter tends to be the most maybe market-related in the way it is priced, traded. It's also the most volatile of the commodities in the cocoa. So I've been focusing on that for a while, and I think that gives you quite a different angle of exposure, because suddenly you're no longer speaking to a supplier in West Africa about thinking about those execution risks. You're now looking at the end customer of your product. You start thinking, well, what's the right asset optimization? How should I take the maximum advantage of the assets I have? Do I have the right footprint? Should I be located differently? Should I have partnerships? How should I optimize it? What's my margin curve position? Is it a good time to optimize my margins today? Should I hold out, take production risks? And obviously, how do you build the whole customer relationships? And it's not just about what's the right price I should give to the sales organization, but what should be my strategy for the next 1 year, 2 years, 3 years? How do I position on that also in terms of product portfolio? Do I need to have a different capabilities in what I do? And I think the exciting part is that in the physical products, you also typically run inherent risk positions, which can be either as a matter of running your day-to-day business, or which can be voluntary, that you say, well, actually, I see a certain product dynamics emerge, and I really want to take an advantage of that through my deep understanding of the whole process. I think there the understanding of sourcing, trading, futures market, risk, and the product was really, for me, critical to feel very empowered in taking those decisions, because you really understand the full supply chain. You can connect the things between themselves and say, well, I feel empowered in the way that things are going, and I'm ready to put a certain large positions on the product part. I think the exciting part about product positions is that you can run definitely much larger positions in terms of a size as compared to typically your futures positions. The disadvantage is that it's highly liquid. You definitely cannot build a position in a day or get out in a day. And typically those tend to be long-term structural positions. So you have to have a sort of a 1 year out or 2 year out vision. What is happening in the product dynamics that could lead the price development in my favor? You constantly need to challenge yourself, of course, and be able to adjust. But I think having that experience of sort of a longer term structural vision is an exciting one, because on the paper markets, your time horizon typically tends to be much shorter. You're not trading on a daily basis in terms of a day trades, but you typically have a time horizon between maybe 1 week or 1 month on average, because things move just so much. So you constantly have to readjust. While on the products, the moment you build your position, you commit yourself for the next 6 to 12 months probably of, from the execution of the start position to the profit taking. Maybe you're looking up to 1 year and a half. So that's been the part of the cocoa market, and I've been involved also luckily in a lot of strategic projects, a little bit more on company strategy, organizational matters, product line architecture as we call them. So it's quite a nice exposure outside of a pure trading, which for me was beneficial because I liked it. Versatility that it brings you as an individual to not just understand, well, I can trade futures and have long or short positions. I can understand the physical market, but also understand, okay, how do I build partnerships, alliances? Where should I invest? How does it work? How do I build a company strategy? I think after quite a long period of time, it took more than a decade to really enjoy that wave. At a certain moment, we were discussing it at the earlier part, you feel like, well, I'm getting a little bit in my comfort zone in the sense that you realize that your learning curve progressively flattens. You still learn something every day. I think in trading, you definitely never get to a point where you feel you know it all. There is always something to learn, but let's say the learning curve was flattening, and especially for me, there was the moment when I felt like, well, I would like to expand my perspective. I'm probably missing a different angle. I'm missing a different way of working, different way of doing things. And actually, I would love to experience a different commodity. It's great to feel empowered and sort of very highly expert in your domain, but you realize that you'd like to see, having the understanding of how things can be done differently or different market dynamics, really, I think, enriches you as a professional, but also individually, working in different team environments. So for me, there was a moment where I was looking for a different alternative outside of cocoa, and then Cargill also had an exciting bioenergy business, while not being an energy major in a way like some of the oil majors, because of its connection to the agriculture. And Cargill tends to think in supply chains and in just sort of synergetic value chains. Bioenergy was quite synergetic in the way it connected to the agricultural world. So there was a bioenergy division, which was basically focusing on the production of biodiesel, trading of biodiesel. And there I was leading also a team focusing on asset optimization, feedstock sourcing. So how do we feed the plants in the most optimal manner? What's the right quality? What's the best feedstock we have? How to optimize on the price positioning on that. So quite often also taking proprietary positions on the feedstocks, typically vegetable oil, which would be more flexible. in terms of position taking on the derivative markets. And then, of course, you have the whole customer end. Okay, which are the best markets I want to merchandise my material, and what strategy do I want to have? So there you need to have both a short-term view, what is the optimal market to sell my products today, but also longer-term view, what do I want to develop in the next 2, 3, 5 years? Should I expand more to the Eastern Europe, Nordics? What kind of products should I have? What kind of capabilities do I need as a company? And on top of that, of course, there was also a physical trading book where you can source materials you don't even necessarily produce and be offering that to your customers and basically create value in between. You put your shorts on and you try to optimize by sourcing in the market through the ways that give you an edge, either quality optimization, origin arbitrages, or other things. So that's been the journey to the bioenergy, and I think for me it's been a very enriching one. And very quickly it felt like a whole different life, let's say, in the sense that your learning curve really becomes exponential. You get challenged immediately because you realize that the ways of working are very different, not just because of the teams are different, but also because the market drives different behavior. You probably have a different price discovery mechanism, you have a different interconnections between different commodities, more relative value plays. And that, I think, was really enriching and learning for me as an individual. I think also, of course, team leadership has been an important one over the years, let's say, but I think in the product change, they brought the benefit that was what I was hoping for. And more recently, eventually, what I think also happens, I think for some people in their journey, is that, corporate environment brings a lot of advantages because you have very solid processes and structures and supporting organization that helps you really focus on where you're best at, where you bring the most value. The risk or disadvantage is that you're not exposed to those things outside of your primary course. And you realize that maybe sometimes, if you really step out and go to a different environment, well, do I have the tools to think smartly, think differently with limited resources or different resources, less central support, be involved in other conversations, be more entrepreneurial, have more personal impact on the business generally, not just in terms of notional impact, because of obviously in the notional impact you want to be the biggest players, but more in terms of a personal impact of where the company is heading on, the success that you personally contribute to. So FincoEnergies at that moment contacted me, and that was a great opportunity to, for me, I felt the perfect timing in my personal journey to switch from that corporate environment to a more entrepreneurial environment, while also being more exposed to the energy sector, because going from that connection of, let's say, agriculture to bioenergy in Cargill, FincoEnergies is really more of an energy company player where you will also have fossil fuels, renewable fuels. You really get much more exposed to the energy world in essence. So there's been sort of a combination of twofold, both a more entrepreneurial, hands-on leadership role, because also being part of a board was a great way to participate in the company's strategy and mission and vision and the whole change management. And then the part about trading where you're much more exposed to the energy markets. And this way I am today. So happy to be on the podcast, share some of these experiences.
Well, it's just an amazing story. And I think how you explain it and elaborate on it, I think it's also very well said, I must say. And also the things how you've learned is very interesting. Looking at your story, you said, well, after 10 years, it was for me time to move on. And you said, you wanted to learn something new as well. Now, I think that when I speak to other traders and people that are in a certain commodity for quite some time, switching is always, it's super interesting. I think it can open doors, give you massive opportunities, but it's also a bit scary because you have been in that specific commodity. Yeah, you've been so strong, you've been trained, you know everything. You have the network. If you go to an event or conference, you can say hi to everybody, you can have the dinners, and then you come into a new world and you go to that new event where you don't know anybody. So doing that is always a big step. But I think that big step is extremely rewarding when you do it, especially when you learn. What's the thought process that you went through when you said, okay, should I stay in the cocoa and maybe now go to a chocolate company, or that's also an option, right? Or stay within Cargill. What was your thought process in saying, well, no, it is for me time to go to the side of energy?
I think it's a very valid question. I definitely spent some time thinking over it at that moment. I think for me, really what trading also, why I was always so excited about it. It's really that idea of you constantly challenged to think differently, to learn. You have a continuous learning, it never stops. and sort of be a better version of yourself every single day, because you have to expand your ways of thinking, looking at the matters, and always sort of prepare for an unexpected in a manner. And I think one of the challenges that I was confronted to personally is that I felt like, well, as you say, I built all that network and all that people in the industry. It took so much time and sort of like a capital investment almost. You say, well, I've made all those efforts. Does it make sense to almost sacrifice that and all that knowledge that you gain, which is so unique, and you sort of restart almost from a clean sheet? But I think the advantage of doing that big leap of faith for change is really that you say, well, I want to be a stronger individual. I want to be more round individual. I want to be able to have different perspectives. I know a certain way of doing, and, to give you examples, maybe I'm great at doing very strategic, long-term trading game plans, but can I be also successful in sentiment trading? Just, identifying early trends in the markets with imperfect information, but also be able to capitalize on that. I have developed a certain trading expertise over all those years, risk management understanding, the whole execution process, and just generally the trading discipline. I know myself better. I can guide teams to be successful. But can I use and replicate that knowledge in a different environment and make it better? Can I make it more complete? So that desire to have this, let's say, multi-facets or multi-angle approach to certain things was really driving me. I think the other part is that indeed learning a different commodity, I think the energy for me personally was very exciting in the sense that energy is at the heart of everything we do on a daily basis and across the world. And you can see it be it in the political news or in the day-to-days. Energy is really at the heart of it. But it's also at the heart of the energy transition. So for me, I've always been excited about the sustainability topic. I think it's very relevant. I do think climate change, is a critical challenge we have as civilizations, let's say, to face. And energy transition, specifically biofuels, is something that brings that angle. So I really feel like I'm part of a very strategic core, let's say, of what makes the world move. That's the energy part. And I'm also part of this fast evolving, super hot and super critical transition period, where I'm thinking, well, from the energy mix I have today, what is the appropriate energy mix I should have tomorrow? And biofuels plays a role in that. So I think that was really a strong personal also impulse to say, well, I'm really excited to be able to do something where I feel my day-to-day actions also contribute to the decarbonization journey. And frankly, I think, as you say, you first see what you leave behind, probably. But today I can definitely say with comfort, I'm extremely happy about having done this step, because you see how much you gain. And, I discussed a bit earlier, I feel like, in the last 4 years, I feel like it's been 20 years. Because just the amount of personal progress you do and the growth you have is just so steep that you really get the right benefit of what you're looking for. So my recommendation is also for people who are in the commodities markets, certainly at some point you have to be a specialist in what you do. You need to understand the markets you operate, but you definitely should challenge yourself at a part of your journey to get out of your comfort zone, to get out of the commodity you know so well, venture yourself in a different environment, and you'll see the benefits of these different ways of working that brings you. And I think it's also a very strong personal confirmation. I can be successful in a very different environment. I have those trading skills that I can use in a different commodity. That learning capability, understanding of market drivers, I can quickly apply and use it in a different market environment and be successful. That also, I think, is a little bit like, serial entrepreneurs. They have this, they build out a company, then, they successfully sell it out and they move to the next. They have the skill set where they validate to themselves, I can be successful with this and doing more differently. I think once you change, you also have this personal validation. Yes, I can actually be successful beyond the product. It's really about trading skills, risk management skills, and as an individual.
So I have a question to both of you. So you say about the successful traders, right? So I was discussing this with my team, and we were talking about how are our customers at Vesper successful with data? How can we help them? Where's the ROI? So if you look at a trader, right? What's the ROI of a trader? How do we measure how successful a trader is, right? How would you? Because it's sometimes quite difficult if you have a short, you take position short, long. It's not like nobody almost does back to back anymore, right? So then back to back is very easy to measure if it was a good deal or not. However, in positions, different world, especially when you have a lot of different products like feedstock and now. So how do you measure if a trader is successful?
Yeah, I think it's a very good question in the sense that it really depends, and there is no silver bullet. I think it starts first of all with what kind of trade are we talking about? You have traders focusing a lot on what is commonly called, asset or system trading optimizations, where you have your physical system and you sort of trade around it or optimize that. And the other extreme angle, it could be, pure proprietary trading. Of course, in pure proprietary trading, in essence, it's the easiest because the results are very easily visible. So, okay, what kind of multiple are you making on your value at risk? That's pretty quick to look at. You can look at how much working capital you deploy. You may look at, what has been your sort of, how much of the peaks have you been, or, what's your variability of your P&Ls. You can introduce all kind of sophisticated metrics which make it quite easy to sort of judge the risk-return ratio and then also the consistency of that and be able to relate to certain market conditions. In my experience, unless you are in that environment where you're purely proprietary trading, it tends to be a combination of both an asset-based trading, where you have some physical system, and the proprietary trading together. And then things tend to mingle quite fast because you realize, well, if I buy a cargo X origin, but I want to be directionally long, I decide not to hedge it. Is it a proprietary or is it also connected to my system? Well, you would say, well, that's easy, it's proprietary. Now, that cargo had a certain quality spec, you bring it in to your destination, you do a quality blending optimization, you create some extra value from that. Is it purely system or proprietary? Well, you could say that's a system-based. But how much of that is, let's say, what is your market benchmark? How much is available from the market conditions? How much is from your extra input that you do as an individual trader? Now you bring it to your system and there is another way you can capitalize it in the way you price it to your final customer. And maybe there is a different futures pricing market or a different pricing formula. And as a trader, you can also optimize on that and create some value.
Complicated.
You do that. And then eventually, then you might have some spread positions on top of that. You look at the whole sort of position from A to Z. And it becomes very difficult to parcel out and say, well, this part is pure prop, this part is pure optimization. And also you start to miss, maybe even in your internal systems and reporting tools, can I really parcel out different buckets of that very specifically? Do I have sufficient industry benchmarks to say how much extra value I bring? Because ultimately that's what you want to see. You want to see what is the extra return do I generate versus what my market conditions offer to me. So I think it is quite a task. I do think, generally speaking, that you have to aspire to bring visibility. Because by default, if you talk about, you want to expand your teams, you want to expand your trading activities, you want to grow, you need to understand, where am I really successful? Where do I create value today? Should I invest a couple of million to take some extra storage capacities because I'm so successful at my cargo trading or at my quality blending or other things? Well, for that, you need to have some numbers to even support your business case. So you do have the need to bring that visibility, but at the same time, at individual trader level, it is very difficult to really, put just one number out there and say, well, that's exactly what this person specifically generated. Much easier for paper positions, a bit more complicated once you go into the physical environment.
So if you would have a conversation, because the crop, for example, on cocoa is once a year. So that's maybe difficult than maybe palm oil, what is 5 times per year a crop, and there's a constant flow. But if there's a production coming in, volumes coming in once a year with cocoa, you know the price where you bought it at, right? And then you start putting it in the assets, you start making cocoa butter, cocoa powder, chocolate of it, whatever. And then you say to the traders, well, and the half year, end of the year evaluation, you did very well, you did moi, or you did very good. How do you judge these traders? Well, if you are a new person to the industry, I think it's also very interesting. Like, where do I need to be good at, right? Where is the head of trading looking at? When it's part of being conversation, of course, in the group when you have a discussion. What's your input, of course? How good are your analytical skills? But also, how do you measure somebody? If I have here in sales, I can just measure he sold this many subscriptions, had this many calls, blah blah. It's very tangible. So, how do you do that? How do you manage that?
Do you understand now why almost 15 years ago we hired him? Because when we interviewed him, it was something like this.
Imagine already this level.
No, and what I want to say before answering your question for the audience, I think what we have heard so far is almost like a masterclass already.
Yep.
And what I hear is how Denis and I have been educated in Cargill. This is more than 10 years, and in my case, more than 25 years of Cargill. Mm-hmm. Trading, merchandising, education. So You learn to look at the screen, you see a price, but then the question that you raise, is it a good price? Right? Should the price be there? Should it be higher? Should it be lower? And then you move into, also understanding the assets, how they work. You expand to products, to building relationships, all these things. So for me, what Dennis said is also, again, very, very interesting. And I'm happy with it because it is great for the audience to get an idea of how you're being educated and how you then progress through your career. Interesting thing is he started with cocoa and I ended with cocoa. And I thought I should have done energy because I thought, cocoa is a niche. It's nice, but, energy is everything. So that's something that I missed, but I did actually vegetable oil before that. I was the first one in Cargill who started to implement biodiesel usage in my own S&D. Yeah, so it's quite interesting, right? And then I moved to cocoa, and then you, years later, started to really see the impact, much bigger impact of biodiesel, and you started to run it. And so it's nice how these things go. Now, going back to how you judge traders. Yeah, look, when I started, there was no DFAR. No one talked about DFAR or risk-adjusted returns, right? What we had an amount of capital that was allocated to us, to the business, and we needed to make a certain return. And the return was driven by managing the assets and then around that proprietary trading. But there was no benchmarking, not even within the company. So basically we had a budget, and the budget said, look guys, you need to make this amount. This is more or less what the factories are going to generate. And the rest, you guys need to make it out of thin air. Yeah? It was usually the trading target was, maybe it was something related to what it was last year. And then we needed to make some kind of scenarios. You mentioned S&D, right? You mentioned crop. And when we said, well, okay, is there a story? And then we needed to explain why we thought we would be able to make this type of trading P&L based on the fundamental analysis that we did. So usually it was like a round number, and it wasn't derived from.
But then it's interesting, because when I speak to friends or people in the bar and they say, oh, you're traders, and it's always big bonuses, and that's the mindset. So, and I think it's changing a bit, but still, it's always been a bit of a bonus culture as well. So you would say that at that time, you got a bonus based on just a very high level P&L number. Is that, and now it's changing more to many metrics, as Dennis is saying. Is there a change in how
those things are different, because the bonus schemes, they are very different.
That has nothing to do with the P&L, with what the results.
It has to do with the P&L,
okay.
But there are very different types of schemes. Yeah, you have what is called direct drive, which is a percentage of P&L, but then you need to define, okay, what is like Dennis already said, what is the P&L, and what is trading, and is it purely proprietary trading? You sit in a room with no windows, you trade futures back and forth, or is it futures and physical? Is it futures, physical, and factories? It's all very, very different, and you have different schemes within companies. But one thing that Dennis didn't mention about how do you judge traders or trading is, for me, it is the consistency. And what you mention is also related to who does the industry often talk about the big egos, to go big or go home. And that was also in cocoa. There were a couple of traders who were really well known. I guess so in energy as well. But most of these guys, they blew themselves up, and they blew up the company as well, right? So what I mean with consistency is that, yes, nowadays the judgment of traders is very sophisticated, basis much more sophisticated metrics than say 10 or 20 years ago. But what was the case in the past and still now is the consistency. So are you able to consistently deliver P&L and not blowing up the whole business. I think that is what the most successful traders do. One other thing, so there's two things I made a note as well. The good people. Yeah, so as a trader, you have a duty to make sure that you hire the future of the company. So good traders, are also good because they manage to ensure that the future of the desk and of the company is safeguarded. So you need to hire the best and the brightest. So people who do that, they are also very much appreciated in a trading company.
Okay, but that's when you are more senior. But if you are in the first 3 years of a trading job at a trading company and junior in the team, then your success rate, the young guys, they're probably also a bit, economical, let's say money driven. They just want to have a good, nice bonus and buy the first car and these kind of things. So and pay the rent in these expensive towns like London, Geneva, Amsterdam, Paris, and so that's also what they want, right? So
that is true, but, and this is important again for our audience, that we specify this. What drove me and Dennis, and I think also you, was not that. What it was, in the beginning certainly, was the intellectual challenge. The whole environment, the complexity, being surrounded by very smart people, learning a huge amount, and then all of a sudden, I realized, actually, in this industry, the money can be quite good. Yeah. So I tell people all the time who want to work in the commodities industry, look, do you really genuinely like this stuff? Does it interest you? And the things that are happening now, and Dennis came in the morning here, and the first thing I asked him, hey, how are you dealing with this new situation in
we need to talk about that.
With Iran and
it's
Israel.
It's going to be an interesting one.
Because, that needs to interest you. And when the thing, blew up on Friday, I was thinking about my utilities contract. I booked my utilities contract on Friday. But look, it's like when you see these things happening in the world, as a trader, you immediately start to think so many steps ahead. And you start to think about risk, reward, people, and that is what it makes it challenging and interesting. And that is why you continue to learn, because also this situation, is new. So
no, success has different forms, so that's how it is. But no, I agree. But thanks. That's a good one to. I think also for the younger guys. I got that question quite often, also in private messages. Now I would love to talk about what's going on at the moment and how does it impact the biofuels. Because one of the things, I was on Sunday talking to an energy trader, a friend of mine, and he said this could really change also how we look at biofuels, where we're always talking about tickets and everybody is long in tickets, I believe. Maybe I'm wrong, but you will correct me. And then it could be that if energy actually the natural fuels would go up now in price, that economically it could be interesting to even buy biofuels. That's, of course, even better situation for the world. What is your view on this? What's your look on and take on everything what's happening now with Iran, Israel? You will have new transport routes.
Yeah, so I think it's an excellent question, and it's definitely not one you can answer in 5 minutes. But let me try to sort of give a broad view. I think it also depends on your time frame of, are we talking about next week, next 2 months, next years? Generally speaking, if you look at the biofuels, the way biofuels trade in the markets, they trade as a reference to the fossil fuel. And the reason is that because basically people want to see what's basically the cost of my lower cost carbon fuel or my renewable fuel. And there obviously what drives the biofuel prices is everything. You always have supply and demand part. Now on the supply part, there's really the production, and that's the production economics. Now what drives the production economics? You have a cost of the input, the raw material or the feedstock as it's called in biofuel. And you have the sales price of your biofuel itself. Now, the first component that we need to assume stable in this scenario is that the feedstock price doesn't react to the energy prices, which is questionable because energy goes into everything. So ultimately, even the agricultural sector typically has a correlation to energy because the cost of inputs, fertilizers, but the machinery, the tractors, the whole logistical transport chain has a certain correlation to the energy prices. So you tend to see that things move a little bit in a conjunction, let's say, as a almost all commodity class, so to say. Now, as the fossil reference is increasing in price dramatically, which is the result of the current tensions and escalations around Israel. So the first reaction you have, the whole fossil energy complex is moving up tremendously. The prices are increasing. Now, if you're a biodiesel producer, your feedstock price didn't change. Let's say you're buying used cooking oil and that price didn't react to energy price for the time being. Well, you would say, well, suddenly with the same premium for a biofuel, let's say it was a premium of 800 over a gas oil price of 600. I used to have a final price which was 1400 equivalent, but because my gas oil price now increased by $200, suddenly I have a 1600 equivalent. I get a much better price on the sales part while my cost of input didn't change. So your immediate reaction is that your margins improve. So then typically you would expect, well, that probably will encourage quite a dramatic increase in the supply part until your margins sort of converge to whatever is a fair value of margins required by your S&D. Now, the biofuel premium typically, therefore, would compress somewhat as a result of these improved margins and more aggressive either hedging or actual selling. Your bio premium will reduce. Now, the way that the European compliance works, for example, but other markets work in the same way, is that you have an obligation to blend a certain renewable fuels or low carbon fuels for the road transport. All of us are driving some share of renewable fuels without knowing it, maybe. If you have a diesel car, you drive a 7%. Biodiesel, typically, that's what you see, B7 at the pump. And if you have a gasoline car, you would typically be driving an E10 or E5, so 5 or 10% ethanol. So everybody's already driving on some level of biofuels. Now, the way that those mandates work in different countries tends to be sort of a twofold. You always give it an option, which is a little bit of this sort of a free market approach. You either have to blend that material yourself up to the required levels, or you can buy a penalty or compliance tickets to make yourself compliant without actually doing the physical operation. So sort of you choose between the two. What happens is, of course, as the biofuel premium reduces, suddenly the usage of biofuel becomes more attractive if the bio tickets or the compliance tickets didn't move in price. So your first reaction would be, well, actually, if yesterday I was interested in buying bio tickets, for example, maybe today I'm much better off to buy the biofuel myself, put it into my operations, blend it to the required levels, or maybe even blend a surplus on top of whatever required levels are, because I can basically create equivalent tickets at a much lower value because the biofuel just drops so much in the level. So your typical first reaction would be indeed, an increase in price in the energy space. All else equal will lead to an immediate compression of biofuel premiums, which we saw already on Friday, today. And eventually that creates an incentive for blending. Now the problem or the natural rebalancing is that everyone starts buying biofuel, which will be creating compliance tickets. If they buy biofuel in excess of what they need, they will have to sell those excess bio tickets to the market. So eventually the bio tickets value also reduces. So then the blending margin, so to say, or the difference between the biofuel price and the bio ticket is also not a static one, it's quite a dynamic one. Because as you have increased activity of blending, you have increased activity of sales on the ticket side. So the spread would narrow to whatever is, again, a sort of equilibrium level. Now, of course, it sounds sort of very easy in terms of a sequence. The thing is that when you have violent moves like we have now on the energy prices, if you have a price spike of 10%, definitely those components will not adjust immediately one for one. So you immediately have dislocations. Something may be adjusted for 5%, something didn't move, somebody else didn't wake up yet, maybe this market didn't realize. And if you, for some customers, maybe they don't look at those dynamics, they just say, well, a buy ticket yesterday was this much, I'm still okay to pay this value today. So that's where, of course, on the trading part, some opportunities arise, also the risk, depending which side you're sitting on, that you say, well, how do I play this short-term dislocation between all this? I had a sort of a balanced situation, and now suddenly one of the component brings havoc in the whole S&D, and then I very quickly need to see where the optimization is. But you still need to have a sort of a fair value view in your mind because, okay, where is the market 6 months from now? Let's assume that this is new plateau on energy prices. Let's assume oil is now not $80 instead of $60. What is the fair value I expect for my buy premiums, for my buy tickets? But that's just from the energy component. Now, the biofuel and buy tickets, they have their own S&D as well. Because what are the mandates that are currently in Europe, for example, in the US? What is the outlook of that for 2026? And what are the current blending economics? Are they good? Are they bad? Do they need to improve? So you also need to look at that angle. And sort of you need to create yourself a bit of a compass. Where should it be heading in the next 6 months? And if you see that where it is now, because as a result of this dislocation, very different to where you believe it should converge 6 months from now, that's where you want to take certain positions also from, not just from your system optimization. That could be one that you say, well, for my own purchase or distribution system, I want to take certain positions that I think are favorable. You can also, of course, take proprietary positions that you say, well, I really get a sense from my access to the market and from these dislocations and my view on what is the convergence in the next 6 months, that I want to take some proprietary positions. But broadly speaking, I think the answer is yes, definitely higher energy prices, at least on the fossil reference, on the short term, tend to reduce quite dramatically the bio premium you need. However, you will quickly have some of these market dynamics that start to work. Is the feedstock price adjusting? Because as your economics on processing improve, on one hand, you are buying more biofuel and you're selling more tickets, but on the other hand, you also buy more feedstock. As you buy more of that feedstock, eventually there is an improved room for negotiation from the supplier side if they feel that the suddenly feedstock price starts to go up. So it sort of always works from the two angles, right? From the sort of supply and demand of all these different steps in the process. I think generally speaking, one of the things that could be seen is that, of course, biofuels, they serve this critical climate transition purpose, which is essential. But also in some cases, you can argue, well, they have become really a part of the energy systems of the modern world. If you look at the road transportation in US, in Europe, well, if you take some other countries like Brazil or Indonesia, where you have high biofuel usage, they are really part of your fuel mix for transportation sector, for instance. So they also bring you a certain stability or a security almost in this highly volatile energy world. It does not mean that you become insensitive to what happens outside, because of course the majority is still the fossil reference. But definitely the biofuel component has a little bit of this maybe soft landing effect, in the sense that you say it's not just about diesel and gasoline. I also have a biofuel price dynamics. And if the crop prices remain cheap, if the feedstock prices remain cheap, maybe indeed my biofuel component becomes increasingly competitive and I can use higher percentages for my blending. I think the other part that probably is always there is, you have a voluntary markets and you have compliance markets. Compliance, you do what is required by the regulations in certain countries. The voluntary part is anything you do on top of that. It can be by yourself because you see some economics that are favorable, that you want to buy biofuels, create tickets and create a blending margin. Or it can be because your end customers say, well, I would like to accelerate my energy transition plan. I would like to use more biofuels in my road transport, my marine transport, or my aviation sector. So, of course, a lower biofuel premiums also do the work of triggering a little bit more demand response, even though it's not that the elasticity is not that elevated, so it's not like lower price triggers suddenly a big jump in voluntary demand, but definitely it is stimulating in the near term and in the longer term some more voluntary demand. So what you could see is that if your biofuel premiums remain low, maybe some of the voluntary market players who have their decarbonization agenda, that they want to reduce their transport emissions, they start buying increased amount of biofuels for their own pools, let's say. And that, of course, in time will create additional demand, which should also elevate prices. So it's sort of a complex puzzle, but definitely I think what you see is that there is so many interdependencies that you have to be on top of each of them and try to see, okay, where are we heading short term, mid term, long term? And this is where you need to take your decisions from trading risk management angle. What
kind of systems do you apply at Finco in order to dynamically adjust your S&Ds? And so, for example, this scenario and that you're describing, And what is also interesting, I think, for the audience, is the type of conversation that we have here now on the desk. That's the type of conversation that you would have on a desk. Something happens, and then immediately you start talking about it and you start going through scenarios. But then at the end of the day, you still need to put metrics on it. You need to have an S&D and start to tweak the numbers. In the old days, it used to be huge Excel sheets that we had, and we had a research department, and then we started to actually look at those numbers, and in a meeting room started to challenge those numbers. And at some stage, an S&D came out, and that was the S&D that we traded. How does it work now with you at Finco? So you're the head of trading and the chief trading officer. Sorry, you have traders. Now this whole thing blew up. You can think about it over the weekend. Maybe you sit on your WhatsApp. That's also what we did all the time, discussing on WhatsApp what kind of scenarios there would be and how we would position. How does this happen now? So what is the process and the system now currently in Finco in order to quantify what you just discussed?
I think it's, like I say, there's different angles you approach it. I think the first part is definitely you want to have your whole trading organization aligned. Okay, what could be the plausible short-term effects? What are we doing about it? Okay, we're going to have a market open. What is the instinct that we're going to have? And you need to accept that you're not going to have a wholly refreshed new S&D by Monday morning, but that you need to have an understanding, okay, where is this heading? What are the possible escalation scenarios? What is the price sensitivity? How much further would it go? What could it imply for flat price? What could it imply for spreads? What are our current exposures to those? What are the exposures we'd like to have? And then the question, okay, what does it mean for the biofuel prices? How quickly will they correct? Is this dislocation a short-term one, in which case you say, well, my energy price is compressing dramatically my biofuel premiums, but actually my biofuel premium, S&D, so to say, is still supportive, so I want to see it as a buying opportunity. Or maybe you say, well, actually, we're heading for a higher energy plateau, and by the way, my biofuel S&D is not there to give me that compass signal. I'm not comfortable doing anything around that. So you have to, I think the first thing is really having your trading organization aligned and have, you also have people with different expertise in the sense that there is such a variety of products. If you have someone who has been experienced for 20 years in middle distillates trading or diesel trading, for example, it's a different profile than somebody who's trading purely biofuels or fuel oils. So I think that's also where you bring the expertise you have in the house from different angles. So, okay, let's try to make a holistic one view. What do we as a company think of this, and what are the specific effects on different products? In terms of S&D, what you want to do is that ideally you want to start to test some of those sensitive input parameters you have. And say, okay, well, what does the new scenario mean for those parameters? Does this affect my demand for fuels, generally speaking? Well, that's a very difficult one, generally speaking. I think there has been tentatives and efforts in the past to quantify the price elasticity to demand, and what you see is not so good.
No.
So it's not that for every 10% price increase, you have 1% less demand. It's not working like that, because you have, if you look at the road transport, you have passenger cars, but you have trucks. Trucks is more about the business environment and behavior and the microeconomics. Private driving habits are not so price sensitive in essence. You're not going to change your driving habit because the price is 20 cents up. No. You still need to go to the office or do your groceries. Mm. So I think there you realize some aspects probably you can't over modelize or be very scientific about that. But some others definitely you can put in the model. And I think Excel is still, I think, often used as a convenient visualization tool. You can use Power BI, Excel, in the way of bringing some insights out. I think when it comes to complex data sets, we have it in Python. So that really gives you, from the analytical capabilities, a much stronger position that you say, well, I can really crunch a very large data sets if I want to do some correlation analysis, some regression analysis. But ultimately, usually what you want to come down to is what are the 3 or 4 critical sensitivity factors that I now want to review? Is it my demand? Is it my biofuel production margin? If I inch it up 10%, do I have an increase significantly in the biofuel production? What about the blending margins? What happens there? So you need to know what are those critical elements, and you need to adjust those very fast and get a sense of what is the magnitude. How big is the change really? Because you can get an emotional feeling to say, well, this is going to be big, but you need to test those assumptions in the models you put in and say, okay, how big is it going to actually be? Because if this lasts for 6 months, how much will it affect this year's S&D? We already mid of the year. Assume customers and others that look 3 months forward at least. Well, maybe I don't have an impact this year. Maybe it's more about 26. Maybe it's a different story. So I think you need to sort of do the combination of two. You can't wait to have all the science in front of you in S&D. Yeah. So you need to align your internal expertise, get the best people in the room and with different knowledge angles, and sort of have a general positioning feeling that you have. It's sort of an instinct. What do I want to do if this materializes? And then your S&D very fast in parallel needs to adjust to bring in more substance. Because I think also, at least what my experience has always been, if you want to trade sort of the sentiment of this, erratic market movements, it's also a very good way to do that. But ultimately, if you want to have sizable exposures that you want to have over a prolonged period of time, you generally need that internal compass of, okay, my fundamental picture is supporting that feeling. Yeah. Because otherwise, as the market is so volatile, you also realize, well, if you work with very tight stops, which you should always, you need to be disciplined, you will treat it differently if your S&D is supporting you. Yeah. So I think on the short term, you want to have skin in the game with the sentiment of view you have. But very quickly, you need to substantiate it. And if you can't substantiate it, then it remains as a momentum and sentiment trading, and then you treat it as is.
We're already at an hour, so it goes so fast. It's unbelievable. I really love this podcast, and I really enjoy how you explain it. It's so calming and relaxing somehow to listen to you and hear your story. Yeah, but it's before we end this podcast, is what would your advice be to young people regarding trading if they want to enter this world? Because nowadays, and it becomes less and less, because there are some really cool universities around the world that, like the Erasmus in Rotterdam, but also in the US, are trying to get already students into this world of commodity trading, what I think is fantastic. And you see also people from the industry stepping up to help there. Nowadays, still everybody enters quite by coincidence in this industry, as you hear in other podcasts. What would your advice be for these younger people to enter this world?
Yeah, I think it's one of the first things is be certain for yourself in terms of self-awareness. What drives you to join that industry? What is your motivation? Are you just watch some kind of movie where it all looks exciting and Wolf of Wall Street or whatever, and you feel like, okay, I want to be sort of in this movie style? Yeah. Or are you joining that because you have your intrinsic motivations that you say, listen, I just love this. I love the rhythm. I love that every day looks different. I'm going to be stressed. I'm going to be challenged. I'm going to be able to bring the best of me, but also I'm going to go through all kind of personal learning curves where, it was my ability to handle situations, learn from it, grow from it. So I think you need to be intrinsically motivated to understand, okay, what is that I'm after? That your day-to-day, you shouldn't imagine it just as, something fictional that you... Otherwise, I think if you look at most successful traders, I don't think they're in there just because, hey, it's a job that pays. I think all of them, they have a passion for it. Most of people, and you need to have that passion for what you do because that's what makes you go extra mile. You want to learn more about it, you want to read more, you want to analyze, you get get emotional about things in a good way because you feel like, well, I really want to get there, I want to understand that, I want to learn from that, I want to have the best people around me, I want to build the best teams. I think that what definitely will make you successful. The other part, I think, is that luckily today, I think definitely more than 15 years ago, you have much more material available. So you can definitely, the podcast is a good example, but also, the books or other things, you can definitely learn and read ahead of that to get and build your own opinion of what the world looks like, what is it really about. And I think later, once you enter the trading career, your priority needs to be, always be sort of stretched in what you do. Recognize and admire actually the times of stress that you have, because those moments are typically, building a personality and the professional that you become. The more tough moments you have, the more difficult moments you face, the more tough situations you face, and unpredictable things, that really builds a character. And I think it also builds a professional. So if you're sitting in an environment where you very quickly are very comfortable and you're good at it, probably you're not learning as much and as fast as you probably should, especially, in the early years. So I'd always say, if you feel, if there is some kind of a level of constructive stress or uncertainty and you feel that you're always on the edge and that is sort of gets the best out of you and it's also energy draining but also gives you back energy, that's probably a good place to be. Yeah, so that's my advice. And I think, you by nature, you need to be curious. You need to be willing to learn every single day and to be comfortable with that.
Yeah. What about, you said about, we were talking about what do we like to do outside of the work environment. And, I said I really like cooking because when you just cook, you don't think about all the things of work. That's at least with me. Of course, sports as well. What did you do to deal with the stress and the challenges and the sometimes hectic environment you're in?
Yeah, I think everyone goes through a sort of a journey and also, self-awareness. What's the best way for you to manage that? How do you, I think there's also risk in trading if you have some severe losses and things like that, that it affects the way you trade, it affects your style, you start to be smaller or staying closer to home. And then suddenly you realize there's some kind of a vicious cycle that you feel like, oh, how do I get out? So I think you need to be able to really, remain sort of mature around that and indeed, find your peace outside of work, let's say. And that can be anything. I think for me, that has been sports to a certain degree, some physical activity. It clears your mind, keeps your body healthy, that's great. Or, social events. So whatever works for each individual. Yeah. If it's reading a book in the forest or if it's going for a diving classes somewhere, I think it's just important that you can come in with sort of a blank sheet mentality every single day, and that you're not burdened by your past successes or your past losses to a point where it makes you unable to really trade constructively and pragmatically every single day. You have to judge the things on their merit every single day with new information and new opportunities, new risks. And if you bring your whole luggage with you every time about some of the losses you had or some of the profits that make you also feel that you are invulnerable or that you can do everything, that can affect your trading style negatively. So you have to be this sort of a pragmatic, humble, and at the same time constructive every single day. And yeah.
Thank you very much for this, Dan.
The thing is, I worked for a long time with Dennis, and I've never seen him
stressed.
No, not really.
Maybe from the inside you were.
With a couple of exceptions where I did do that on purpose. The audience,
but that's almost impossible. Just to say that, because you need to if you are a trader, you can't be, in my view, a really good trader when you've never experienced stressful environments, right? Because you always go to the edge of.
No, but Dennis said, you're right. But Dennis says that you learn from adversity and stress or intensity, and things are difficult. When things are difficult, and so I have referred at times, either on LinkedIn but also in this podcast, that how we trained the youngsters, and the audience, rightfully so, listens to Dennis and thinks, hey, this guy, man, that's a strong professional, and he is. But also due to the fact that, he has gone through exposure where he was put in difficult situations. And one thing I still have to laugh about is, he had the responsibility for Nigeria, and at some stage we had a short futures position, and we were heading towards expiry, and I agreed with Dennis that he would basically create the tenderable cocoa, and he accepted the challenge, and I saw that it wasn't going well preparing the Nigerian cocoa through the exchange, and I could have helped him out, but I purposely did not, because I thought that he would learn much more from having the problem exploding in his face. And obviously I did not want to make him fail, and I did not want us to make a mistake, but I was sitting on the desk, I looked at him, and I saw his nervousness was increasing dramatically when he realized that time was running out. So I was kind of like biting on my lips, not willing to intervene, because I wanted him to resolve it. And I thought, if I'm now going to take care of his problem, then he doesn't learn from it, right? But I needed to balance between being fucked.
Nice guy, yeah? Next to you, eh?
and so at the end of the day, he solved the problem. Do you recall that at the moment, or is it too long ago? Anyways, and he resolved it, and he said later to me, Martijn, this is never going to happen again, and it never happened again, right? So it's like you learn
because he quit the job and he said, not at your desk anymore. I'm going to do visuals.
And the nice thing about Nigeria also is that we did a trip to Nigeria with the two of us. That was, I think, one of the best, if not the best, trips that I've ever done in my cocoa trading career. We were the two of us. We experienced so many insane and fun things, and we experienced it together. And that's also what the podcast is about. What makes the commodities industry interesting is interesting people. This guy from Moldova that I see somewhere in Paris during recruitment event, one of the best guys I've hired. And then you're there together in Nigeria, where you normally wouldn't come. And yeah, it was just an insane environment. And the moment we were queuing up to board our plane. Out of nowhere, a guy jumps at us and was taking measures of us, and we had no idea what the hell was happening. But the guy said, "Yeah, I heard you're in town, and we're gonna make suits, Nigerian suits." And we had no time, but we boarded the plane, and a couple of weeks later, Nigerian traditional suits were delivered to the office, and there's a famous photo that
I still have those,
that we made.
I don't have many occasions to get it out.
No, and it's like it's so.
It would be nice if we were sitting in this
It's all
podcast
insane,
with that
and it's
suit.
really funny, and now seeing Dennis here, and I'm proud of him. And he is a fantastic example for anyone in the industry who thinks, that's a great story. And my background doesn't matter as long as you work hard, you put in all your efforts, you learn from difficult times, and then you're the head of trading at FincoEnergies. Right? I mean, that's nice how these things go, right?
Beautiful story.
I think the commodity industry also, it's all about the people you meet. I mean, we haven't spoken too much about that, but I think, the peers you work with, the people you surround yourself, I think it also is a big part of your journey. So it's also, I think, one of the advice maybe for the younger people, make sure that your environment where you're actually, challenged constructively.
Yeah.
Be it, either by your management, but also by your peers. You want to be surrounded by people who you feel they are smarter than you, who make you get the best out of yourself and really go the extra mile. And that sort of creates a very healthy competitive spirit where it's not competition, you versus me. It's sort of how do we get each other better? And that's also something I, for example, want to build in the teams when I recruit people, where I think what is the optimal team setup. So how do you get the best out of people? So you want to have an environment where people are each individually very strong contributors, and you have a team spirit, but at the same time you have a very healthy competitive environment where you feel like everybody feels like they're learning something from the other person. They feel constructively challenged. They feel that they're missing something, that they're getting better day by day. Because I think it's also where, as a trading team, you are successful when you have a setup that you build, that this dynamics is there, rather than some kind of same-minded, same view approach where everyone agrees and everyone has the same level of knowledge. You want to have disagreements. You want to have constructive challenges. You want to have people that feel like they're getting better each day because of the people they're surrounded with, their colleagues. So definitely I think that's a critical component also in the trading career. And I definitely have been lucky to be surrounded by a lot of also smart, sharp people, and that helps your learning curve. Yeah.
Thank you very much. Then
Thank you.
We come to the end of this podcast. Thank you very much for spending time with us and telling your story.
Thank you for having me.
It was great.
Thanks.
Thank you, Dennis.
Bye.